Hello everyone. Welcome back. So this is the third video that I'm recording today. So this is going to be the raising capital and syndication structures of apartment like investing basically. Or also just like real estate projects in general, commercial real estate that is. So we're just going to be walking through how like the deal structure is kind of set out, especially when you're raising capital, you have limited partners, equity at stake. We're going to be walking through like the contribution process, the distribution process, and ultimately how like syndication structure softwares work basically. So I know I say basically a lot, but it's actually complexity, right? So it's a lot of different formulas that you have to go through, but it's cool to see, and I just wanted to kind of show you guys through that. So I use like a simple Excel model for just mapping out all of the distributions and the contributions. So let me show you that. And again, it's from like Adventures in Commercial Real Estate. I know I use like a lot of their models, but it has really helped me kind of understand all of the different aspects of like underwriting in real estate. So that really kind of broadened my knowledge on that. So let me show you the Excel model that is displayed here. So hopefully you guys can see the screen. So yeah, so here we go. So this is the American style equity waterfall. Um, it's going to be different between like European equity waterfalls and American style equity waterfalls. So usually I think for American style, it's more lenient, I would say, for the GP. It's more GP friendly. Whereas for European, it's more LP friendly. So yeah, let me just get into this real quick. So this is what you're going to start with, whatever the ownership share in the project is. Say you set up an LLC for the project, and you have owners involved, like limited partners, and they're providing equity. You're going to want to uh, verify what this ownership share is, whether it's 80/20, 10/90, right? So that's going to be displayed here. And then you're gonna do the distributions. So essentially you're gonna have a hurdle rate. So this is essentially what the preferred return that the limited partner wants to see in the deal. That's going to be right here. And then the promote is obviously if you exceed that return, then what is the GP promote structure, right? So whether you're doing a cash on cash hurdle or an internal rate of return hurdle, that all is synonymous with what underwriting you have done in your overall underwriting for the project, right? So kind of keep these tabs, I would say separate for now because it's still kind of an important subject. You don't want to confuse it with all of the other stuff that I just showed you through the underwriting. So yeah, and then for the distribution of capital event, you're gonna have the return of capital, so that's gonna come first. Um, so if it's a capital event, then you're gonna want to do the internal rate of return hurdle. If it's operations, then you're gonna do cash on cash because internal rate of return kind of includes more bottom line cash flows, I would say. It's like the optimal net cash flow that you're getting, and then uh you're calculating the internal rate of return as a subject of that. So if it's a capital event, then you're going to do IRR. So you have a few hurdles that you have. So the first one is just the basic return on capital, what the pref return is for the investor. So 6% is the base one. The first year's hurdle is 12%. The next year's hurdle can be like 15%, you know? So all of that is showed here, and then the formulas are also displayed here. So the LP is always just going to be 1 minus whatever the GP's calculation is. So the GP's calculation is what you want to focus on here. So For instance, for the first one, for the operations, I think we did just the percentage times the ownership stake plus 1 minus the GP's ownership stake, or the LP's ownership stake. So these like formulas are very kind of complex, but I'm just going to go through just the basic returns and the property distributions and everything. So yeah, so basically, if you get over a 12%, between a 12 and 15%, then the GP is going to get 23.5% of all of the capital, right? If it's hurdle number 3, then the GP is going to get 50.5% of the capital, right? So this shows you what how much you're actually viable to make, right? And then the partnership cash flows and returns. So this is kind of cool. So you have the contributions, the day one contributions, right? You have the distributions as far as how much they're going to receive year by year as the limited partner. And then you have also the internal rate of return like checks. So you want to make sure that this internal rate of return fits your hurdle criteria. Basically, since this is 15.4%, the GP is retaining 50% of the equity. So, yeah, or the capital, sorry. And then the GP cash flows are laid out here, the distributions and contributions. So usually GPs can be responsible for anything from like down payments, closing costs, renovation costs, right? Whereas the LP can be just responsible for all of the purchase price for the property, right? So yeah. And then you'll see the internal rate of return right here. So I'm assuming the internal rate of return for the LP and GP is different. So this is essentially taking what their distribution cash flows are, right? And then this is taking what the LP's contributions are. So it's actually not going as far as what the actual project internal rate of return is. I think they're just calculating what the distribution cash flows internal rate of return is. So if you look down here, you'll see LP IRR error check for each one. So and I apologize, I'm kind of learning as I go as well. So this is kind of interesting to observe. So this is pretty simple. You have your property level net levered cash flows, your investment cash flows, operating cash flows, and reversion cash flows. So that is what you want to look at. So this 18.11% is the property level internal rate of return. So I think they're basing all of the distributions off of this 18.11%. So this is also seen in the comments here before the GP fees. So you're literally just taking all of the cash flows from your operations, your and your reversions and your investments, right? And you're annualizing that as the internal rate of return. So yeah, it's a good metric to look at. Obviously, cash on cash is another one. So this is essentially how much cash did I return like from the project, right? As opposed to how much cash did I invest in the project. So cash is basically just like your own equity. So yeah. So IRR kind of takes into account a lot of other pieces such as debt, other external costs that may not come straight from your from yourself, right? So it's interesting, but it's also misleading in some sense. You always have to verify like what is actually viable, whether it's cash on cash or IRR. You want to make sure that you're looking at the right numbers. So yeah, 18.1% is what they based it off of here. So since it's over that hurdle number 3, the GP is going to get some percentage promote. Here's the distributions from operations, the distributions at the capital event, right? So from the operations, you'll see what the LP distributions and contributions are, what their required return was. So essentially they took the contributions and they multiplied it by the preferred return. So you'll see if they exceeded that or did not exceed that. So in this case, they did not exceed that, right? So, but this is just during operations. On top of this, you'll have the return of capital at the capital event. So, yeah. So you'll see here, crap. So the LP distribution is dispersed at the last year. So it's just taking, oh my gosh, what is this? Okay. So they just took cash flow available for distribution. They multiplied it by the LP's ownership, or sorry, the first stage, return of capital and unpaid pref. And then they added back the starting balance, the contribution, the required return, and they subtracted out the past distributions. So the past distributions are essentially what they got in this preferred return, I think. Yeah. Yep. So if you had some tier 2 promotes in that first phase, then they will be displayed here. And then that's included in the past distributions. And then as you keep going, you'll see that the past distributions are, as opposed to the first phase, it's actually the distribution at capital event. So that's kind of how it's structured. So this is a complex like waterfall structure. So usually for most deals, you'll have this like waterfall structure. Because this gives both the GP and LP like options as far as you're putting a lot of this money into this project and you want to see it succeed and you want to see like the returns that you want to see, right? So if you meet those returns, why not just add some additional benefits for both the LP and the GP, right? So yeah, and then you'll see some error checks here and there. So this just shows you that this matches up with the return that was calculated initially, I think. So this 6% should be the pref return that the LP wanted. And then the 12% should be that next pref, the hurdle number 2, right? And then the 15%, I'm not too sure where it is, but that would probably be tier 3 right here. So you can do a internal rate of return check on this. So yeah, so this shows you, and then this error check, basically, it's just taking the sum of all of the net levered cash flows and it's matching that up with the from the property, that is, and matching that up with the sum of all of the distributions for the LP and GP. So this is a nice summary tab right here. This shows you like how much the GP and LP is actually making from all of these like waterfalls. So right here, you'll see that it's essentially the distributions that we calculated on each phase right here, right? So you'll see in that last year that they actually got, oh wait, no, one sec. Where is it? Yeah, this last year they got a lot, right? So what is that including? So if you look down here, it's the LP distribution during the operations. It's the tier 2 promote from the operations. It's the distribution at capital event for the LP. it's the tier 2 promote from capital event, and then it's the tier 3 promote from capital event. So all of that is just displayed here. And this shows you how much money did I put into the project and how much did I end up returning on that last year. So obviously this is a patient process, you know. It's a long hold period. You just have to stay patient and just trust that like the GP is managing like the project well. And obviously as the LP, you should always be obligated to check up on the project and see how it's performing, you know. So yeah. And the other thing is so LPs can be like 20, 30 people, right? GP could be just like one person. So you want to make sure that you're screening the GPs thoroughly and making sure that they're actually viable, they have a good business model, good plan in place to actually make the project successful. So I think it's one of the bigger duties of the LP to make sure that whatever you're investing in, this is your hard-earned money that you're putting your money into. So always verify and just talk with the GP, understand what they're trying to do. If you think it's like going to be successful, then you go with it. Otherwise, I would highly suggest to take a risk averse approach with this, you know, just because you never know what types of sponsored deals are out there. So yeah. Um, Yep, and then the GPs is also displayed here, as you can see. So it's that first distribution during operations. Just take a look here. And then it's the tier 2 promote, the return of capital, the promote for tier 2 again at distribution of capital, and then the tier 3 promote as well. So yeah, it's pretty cool. This also is kind of a good model to do just basic structures off of. So you can edit like all of this and just like get rid of this or not include it, you know. It can just be like a basic, just like pref return model that the investor returns this. I mean, sorry, the property returns this. This is how much is distributed for the LP and GP. Like this can be a lot more simpler, or you can get more complex with it. So it's really customizable, which I really like. So yeah. And then going back into kind of our uh portal, basically, this is our cash flow portal that we use. So it's a great company. They do a lot of great work in structuring this for investors and syndicators. So I highly recommend if you're just starting out, just to take a look at this because, or any other like software in that case. There's a lot in out there, such as like Groundbreaker, other portals that are interesting to take a look at. But this was just one of the ones that kind of stood out to me, so I just went with it. But so as you see, like they have a whole marketplace which attracts a lot of general sponsors or general partners and limited partners. So you can find like literally like the top GPs in your area that are doing deals, basically. So here, like if I look on here, like this is the owner, by the way. Quick shout out to him. But yeah, so literally like so many people that maybe you've heard of or you've came across like either through podcasts, books, social media. And it's really cool to see like how many connections that you can make on here because you can literally upload your whole CRM on here and just start making connections and putting the word out there that you're investing in real estate and you're doing projects, right? So it's a great jumpstart to any project, especially if you raise the capital successfully. So they have a few educational articles here about like what a syndication is. So if you're not familiar, it's essentially sourcing capital from limited partners and putting that into your model and distributing that out as the years go by. So it's kind of cool. And then Obviously, it's different from real estate investment trust, but they also have like events that come up all over the world. So that's pretty cool. And then you can find deals on here. So any sponsored deals you can take a look at. You can find the general partners. So for instance, if I look at Perry, right? He has a great amount of experience with doing syndications. Obviously he's a multifamily investor. So you can just get in touch with him. You can shake hands, and just say, "Hi Perry, really like cash flow portal and open to doing deals," right? So, oh, you have to go through all this. Okay. But all right, so that's kind of how you shake hands. So I guess the shake hands is not really just a hi hello kind of thing. So you're actually getting qualified. So this is how you get qualified. So this is actually pretty cool. So you add your qualification profile if you're accredited or not accredited. So I think the rule is for 506C, you can find unlimited accredited investors, and then 506B, you can get like up to 35 like non-accredited investors, like friends and family, onto the deals. I'm not too sure. Let me just verify that. Five oh six B is that companies cannot usually solicit or advertise with 506B, but they can generally solicit or advertise with 506C. You'll probably want to go through a breakdown of what the difference between 506C and 506B is, but just know that with 506B, I don't think you can advertise. 506C you can. So yeah, so I'm assuming actually 506C is more public. 506B is more private. So yeah. So you put your investment amount, your timeline, location, likelihood to invest. This is just like a rough, like I would say soft commitment that you can make with the GP. So this kind of shows you what to go through. So what are you looking for? And then you save it and you get in touch with them. So yeah, and then if you want to check out his profile, you can just look through how many units that they've done in the past, like passive units, active units, the portfolio value, how many investors that he's done it with, average target IRR, cash on cash target, the actual internal rate of return and the actual cash on cash. So that's pretty cool to see that he's actually outperformed his target. Very cool. And then he's also got some profile videos, really cool. So you can check out and upload videos on here just to talk with your investors and create that like initial connection. He's on some podcasts, really cool. He's done some sponsored deals in the past. Here are his passive deals. So actually we're gonna break down like what it takes to submit like a sponsored deal and then submit a passive deal on here. So we'll go through that. So yeah. And he's a founder, CEO of Cashflow Portal. Awesome. And he's got some FAQs, got some more details, social links, affiliations, what he's good at, what is he looking for. Awesome. Okay. So yeah, this kind of just shows a quick profile of, and also some recommendations. Really cool. All right, so that's how you find GPs. You can make connections on here by just adding like the CRMs. I think it kind of integrates. You can just send emails directly through here. So that's that. And then you'll see all of the GPs that you have either gotten in touch with or looked at a deal with, right? So all of that shows up here. So that's the marketplace aspect of it. As we go to the investing and syndication side of it, you'll see here all of your investment opportunities show up here. Total dollar invested, total distributed, number of distributions, number of deals, number of units. So a good thing to keep in mind about this is that they're only going to charge you as you raise equity. So Say if you have a deal and you don't raise any equity, you're not going to get charged by this company. You're most likely always make sure that most companies that you go through for some of these portals, that they only charge you for the assets under management as you go, right? So how much total funds have you raised through this portal, right? So that's that. And then here's some other tabs here. All the deals show up, the past documents, profiles, investor profiles, trackers. You can put investment trackers, right? Your account details, events coming up. There's one in Florida, interesting. Some more education stuff. So this is the syndicating aspect. So this is really important. So you can add a deal on here. So you want to make sure that you add all of this information, the SEC type, whatever it is, 506B, C, or a joint venture. So for instance, the one I did here, just a sample deal. So I just said that it was 506B, 50,000 Class A limited partners. Okay. You can copy it. So that's another cool thing about this. You can white label like the product basically. So when you white label it, like your investors will get a link to the portal customized to whatever company that you are. So I can customize the portal to ARG Design Build. I can customize it to whatever company, right? So you'll give this link to someone and they'll be able to view your deals. Here you'll see the key metrics that you want to show them. Here's a summary of that. Here's the asset side of it. I see that's another thing I want to verify with this, because I don't know if you can do equity waterfall structures on here. So that's another thing to ask about, because equity waterfall structures are more complex. You have those hurdle rates like tier 1 and tier 2. So I want to see if they implement some of those, or they customize some of those formula additions in here. So you see IRRs of full cycle deals. All right. Debt financing in here, terms and fees in here. Interesting. Okay. So that's good insights to provide to your investors if you're actually obtaining a loan on a project, right? Enable custom portal. So here you go. So you'll get a custom link right here that you can copy it to, and you can customize that portal. You can add your own login, or sorry, your own logo, your background image. You can upload all of that and it'll create that custom portal. So really cool stuff. You can add or you can explore some vendors in that area. Michael Blanc is one famous guy. He does a lot of apartment investing. So he's also on here. So yeah, great source to look through. I would honestly just make sure that if you're raising capital, you're doing a syndication deal, always have some type of software that you can rely on, right? So whether that's cash flow portal, whether that's some other software portal that is created, you want to rely on that, because that's where you're distributing and you're contributing a lot of capital. So a lot is at stake with just this one portal, and you just want to verify. Just talk with like even like the customer service team at Cashflow Portal. Just ask a lot of questions. And yeah, so with any deal, also, I just wanted to show you this, is that when you create a deal, you can upload a lot of cool things. So you can see all your investors, you can see the offerings, right? SREO. I'm not too sure what that stands for. SREO, meaning real estate. Real estate owned property, but wait, no, that's REO. SREO, I don't know. I'm not too sure. Some type of marketing thing, probably. All right, so if you look on here, you'll see that when you're on here, you can upload videos. I'm sure there's a pitch video that you can upload, like you can upload a summary, you can upload some other details. So pictures, you can upload pictures, offering docs, e-signature templates, right? All of that is there. Just wondering, where did they put that video that you can talk more about? So I think it's really important when you're going through a deal that you upload some type of pitch deck video that shows what the deal is about and kind of walks the LP through, and just builds that initial trust with them, you know? So I think that's that's really important to go through. So for instance, if I went to a sample deal, right? If I went to investing and I looked up deals, events, no, it's on the marketplace. Let's go back to marketplace. So if I said find sponsored deals, just go to this guy. It's one of those. Okay, let's just go back to Perry. So Perry, you'll see all of his deals laid out here. So he has a video just talking about his deals, but can I click on one of these deals? Sponsored deals, okay. Okay, so you'll probably have to shake the hand and just ask which deals are open, right? So just go through that, and we'll go through that too. So we'll go through like one that we can shake the hands with, and we'll kind of walk you guys through that. So yeah, definitely. Thank you guys for watching. So this was a quick overview of how to just do the distribution contribution through Excel, just to verify things, and then upload a lot of that information to like a cash flow portal or an investor management portal that you can distribute and do all of your syndication through. So yeah, thank you guys for watching. This was great, and please leave comments, suggestions in the chat below. Also tell me about like sponsor deals that maybe you guys did as the LP or GP. I just want to know like more insights about that, because I'm interested in this and I just need to become better at this basically. So yeah, if you have like some LPs that you've worked with in the past, or GPs, you can let me know in the chat below, and I will definitely I'll take a look. So yeah, thank you guys. Stay tuned for next week. We're going to be doing asset management and property management. And then also just expanding into different aspects such as the interior design phase and brainstorming like project ideas. So this will kind of just be like a an open-ended real estate like podcast webinar style videos, you know? Like it'll encompass a lot more than just like the things that I just mentioned. So stay tuned for that, and I'm excited to see what we can do. Yep.